Welcome back. Still watching Business Incorporated here on Channels Television. We'll head to the markets now. And unfortunately, we see a red this intraday for the NGX, even though we're still retaining the 104,000 level. Yesterday, we closed at 104,000, but we had some hundreds of millions right here. Unfortunately, that's been lost at intraday. Wonder what the trend will be like, by the close of trade today. But let's we did promise to give you those stocks to look out for in the month of February. We have Tajuddin Ibrahim joining us for that conversation. He's the Director of Research and Strategy at Chapel Hill Denham. Mr. Ibrahim, good afternoon, and thank you for joining us.
Good afternoon. Thank you for having me on the show today.
Great. So the NGX did well in the month of January. Could you tell us which of the sectors performed well? Perhaps that would direct us to where to look out for in February.
So the major sector that drove the market in the month of January is the banking sector. That sector gained 9.8%. So when we look at the market performance, we see a lot of interest by investors in the banking sector, largely on the back of the recapitalization exercise going on in the sector. And one interesting thing is that Nigeria in January was one of the markets in Africa that delivered positive returns. So we have the banking sector being the driver of that performance because every other sector index was down in the month of January.
So do we know which of the drivers of that sector, the banking sector? I know mostly to be the fugas.
So not necessarily the figures, but we have the top three, drivers of the performance being FCMB delivering what is close to 18% return to investors in the month of January. The next best performer in January was Stanbic IBTC that delivered close to 12% to investors in the month of January. And the third on that list is Zenith Bank. Zenith Bank delivered 11.2% to investors in the month of January. And I think for FCMB, it was largely driven by the positive news around its capital raising exercise. And Stanbic is also gaining momentum in terms of raising capital. And Zenith Bank has fully completed its capital raising exercise. So I believe investors were factoring this into how they priced the three stocks in the month of January.
Yeah, we've seen FBN Holding also share an impressive result. And we saw, even though yesterday there was profit taking, but I think for like 2 sessions, there was some positive movement, bargain hunting on it. I wonder if it will be able to sustain that for the month.
Well, I think one thing to bear in mind about FBN Holdings, for instance, or any of the banks is that investors would naturally speaking react to any profits that they have booked because when you book profits such as the numbers I discussed earlier, those are paper profits until when you sell the stocks to take advantage of the profit you are seeing. So I reckon that what happened to FBNH was just largely speaking profits taken by investors. And the outlook to my mind for FBN Holdings remains positive. And I reckon that investors will factor that in to go back into the stock at much lower prices to take advantage of another rally in the coming months.
Yeah, talking about outlook, what do we see in the month of February? I know some of our viewers will be like, where should we go in this month of February?
I think in the month of February, we should still, have a positive look at the market. Delivering 1.5% return in the month of January, to my mind, is an indication that there is still up to 38% return for grab for the market over the next in a couple of months before we end the year. So the month of February, I believe that investors should position themselves in selected banks such as Access, GTCO, Zenith, UBA, and Stanbic. And All of those banks, to my mind, are very strong, and investors will be able to take advantage of the expected rally, partly because they are going to pay decent dividends because their earnings will be robust. On the corporate side, I believe investors should be taking a look at the oil and gas sector. Seplat and Aradel are key stocks to watch out for in February in that case. The consumer sector, Nestle and Nigerian breweries are also compelling in that regard because we are going to see recovery in the performance of those two names, largely because they have addressed some of their internal challenges, particularly Nigerian breweries has addressed is FX challenge. The final stock for consideration for the month of February is Fresco, an agriculture stock. I think that stock is going to deliver another good, return for investors, largely because of the strong performance it's delivered in the year 2024, and it is well positioned to pay dividends to investors. So I believe these 10 stocks on the screen are up for grab, and investors should take advantage of the strong fundamentals.
Yeah, so does it mean that February will be another positive month for the market generally?
Absolutely speaking, that is my expectation because we reckon that the stock market, can deliver what looks like 2 to 3% in the month of February, largely because we have other instruments in the market like bonds and treasury bills delivering negative return. And interestingly, we have also begun to see foreign investors take advantage and take interest in the Nigerian equities market. We believe that will sustain an upward trend in the market in February. Interestingly, also, we have seen the stability of the exchange rate, since the beginning of this year, and I believe that is also positive for a positive expectations in terms of market performance in February.
Yeah, but foreign investors also come with their own risks. It's not money. They can just leave at any time.
Yes, absolutely. They can leave at any time, but the reality to my mind is that they will still, see some decent return, and they can have like a waiting period of what looks like, 6 to 12 months before they get out of the market. And even getting out of the market, to my mind, for them will not be a permanent exit. It will just be temporary because they are taking profit, and the moment they are done with profit taking, they return to the market in search of fundamentally sound stocks. And the 10 stocks I discussed earlier will most likely be one of the destinations for them when they return to the market.
All right. Thank you so much, Tajuddin Ibrahim, Director of Research and Strategy with Chapel Hill Denham.
Thank you for having me on the show.